Chris Fabian, District Manager of VG Tax, in studio with Steve Jacobson.
Hey Chris, how's it going today?
Doing good, doing good. Everybody's, getting that bug in the office right now.
Yeah, except for me. So far, I must have some kind of a killer immune system going on here.
Wait, let me cough on you.
Yeah, you know what? I'm going to go take a Zycam right now, actually. I was watching, it's going around too. I was watching NBC. Al Roker got sick, and I don't know if you saw, but at one point he touched Matt Lauer's jacket, and Matt Lauer took his jacket off and freaked out about it on TV.
Oh my God!
It was just a joke. I think it was kind of a funny thing, but then it was played later on. I think it was on Letterman where they computer imposed Matt Lauer taking off his shirt and bathing himself in hand sanitizer. It's the bug that's going around though,
Yep. But we are EG Tax. We're here to help you, and like our commercial said before, 1 month left. Get that last minute tax stuff done. Need extra money for Christmas, there's ways to do it, and people don't realize,
And there are a lot of things that are deductible that you would not think that you can even lump into the holiday season. I mean, the one thing we always talk about this time of year especially is end of year, final things that you can do at the last minute, and I'm a big fan of talking about, deductible Christmas gifts, things for businesses. For example, getting gifts for your clients. $25 per person per gift, and that's something that you can actually deduct on your tax return, but it's a deductible Christmas gift essentially.
Right. And if you have any questions for us, 803-0930, 803-0930, or star 930 on the cell phone, and Steve likes to give the 800 number.
Apparently I'm the only one who knows it. 1-800-616-9236.
And you don't ask us, we can't help. If you don't ask, you could be costing yourself $100, $1,000, couple $1,000. We see people all the time that just, I know what I'm doing, and they don't.
Yep, exactly.
And one of the people, I was talking to our receptionist this week, and her husband's taken the tax course this year, and he goes to her, boy, I have a lot more respect for these people who do taxes, because, you see these commercials where, it's easy, do it yourself. He goes, I don't know how anybody could do it yourself, because it's so complicated, and so there's so many different pieces, and if you don't know one thing, you're screwed.
It's a huge deal, because I remember back in the days when I worked with Sandy Beach and Tony Caligiuri, the IRS was on the one show, and the one IRS agent, Sandy asked the IRS agent, so when is it time to hire somebody, and when is it time to use, the software or the box or what have you? And the IRS agent basically replied, if you have anything more than a W-2, you should really seek professional help. And it's so true, because there are so many things that you could miss out on. I remember the first time I went to Esther, and I was working here, and I was just I was a guy who was making a small buck here at a good old WBEN, and I was putting into my 401k like a good boy should. And when I got my refund, there was a pension savers credit that I was applicable for that I wouldn't have known about it. Yep. I probably would have filed the EZ online, never even would have really thought about it, and I probably would have missed out on that $200 credit that she gave me. I was so excited I couldn't believe it.
But that's what we're here for. We're here to help people. We love to do it. That's why we do it for a living. And with Christmas coming up, extra money, the easiest way to do it is change your W-4.
That's absolutely right, Chris. The one thing that people don't understand is they get this big refund at the end of the year, and meanwhile, they're going crazy throughout the year, living paycheck to paycheck. And how often do we see that? Why not take the money now rather than getting a $5,000 refund during the tax season, where it's interest-free? You're not getting any interest paid from the IRS on it. Get that money now, and especially during the holiday season when you're trying to scrounge extra money to buy your family presents. And by the way, if you're one of those people that does not change their W-4, and you're one of those people that has a refund coming, and you need some money up front and now, EG Tax is helping customers and clients get that money. We're helping people by helping them out by getting them a holiday loan through a couple of different bank sources that we have working with us right now.
Right, and it's not tied to your tax refund.
Nope, it's a personal loan, and it's based on your credit. And it's nothing with your taxes, because refund loans with tax returns are illegal now. So any company that says they're doing them, they can't. They can withhold the money to pay their fees, but they can't give you your money in 24 hours with your tax returns. So the holiday loan is a personal loan that we're helping people get, and it's through 2 different banks that we're working with. And if you need any help with that this year, please give us a call at 632-7886, and we're happy to help you out.
Right, and here, 803-0930, 803-0930, star 930 on your cell phone. Get your questions in now. It is December.
I know, December 1st, I couldn't believe it when I woke up. I thought, a month from now, we're going to be going crazy. But at the same time, I get excited, too, because I get to see my clients again. But it is that short. And the other thing that people don't understand is, too, Congress only, and, not to harp on the fiscal cliff, because I know everybody's tired about hearing about it, and they're, nervous enough as it is. But Congress has about a month left to figure out what it's going to do with getting our tax situation resolved. And that fiscal cliff, about 60 to 80, or about 80% of it has to do with tax law.
Yep.
And it's a big deal.
It is. Everybody's going to be getting, government's going to go deeper in your pocket.
It really is. And you won't really see it until you get that first paycheck, and your withholding takes so much more and your paycheck is so much less every week. That's when you'll start seeing it.
Yep. Some other tips, if you own a business, whether you're self-employed, have a corporation, if you know you're going to need a new computer or, snowplow with the season that it is, go buy that snowplow. Take a $179 expense, which is what?
That would be where you write it all off all in the first year. We just taught my tax class this morning. That's where you write it all off all in 1 year, and you get to expense the whole thing. And the great thing about that is you're buying a Christmas present for yourself / your business. It's a great thing.
Right. With what Steve's saying. So, your wife's in outside sales, and she needs a laptop to take with her everywhere. The husband, I don't know what to go. Typical, buy her a laptop.
Yeah, buy her a computer.
Something she uses for her business that's ordinary and necessary,
Yep.
and then you can deduct it.
And the thing with self-employed people is right now you should be able to have a good idea of what your net profit is. Well, if you buy yourself that expense or deductible present for yourself, essentially, you're not just saving your regular income tax rate, which could be somewhere like 15-25%, but you're also saving, it's 13.3% for
right
this
now.
year, 13.3% in self-employment tax on that expense as well. It's a very big deal.
Yep. Also, how about putting money in your 401k or putting into an IRA?
Yep. The thing that people don't realize is they think, first of all, they think if they don't have a retirement plan, they can't put in and save money on their taxes and save for retirement, which isn't true. You could put up to $5,000 in an IRA that's a traditional IRA, that's a deduction on your taxes, or if you're over the age of 50, you could put up to $6,000. And for those of you who have a 401k at work, you could do what's called an elective deferral and get right into the plan and put as much money as you want in there that they can exclude from your pay up to the thresholds, which is, I think, like what?
15.5 plus an extra 55 if you're over 50.
22.
So up to 22,000, and it's not a percentage like it used to be. Before it was a percentage. Now it's a dollar amount. So if you didn't put anything in right now and you have a super huge salary, you could say, put in $15,000 in my 401k.
And the thing that's cool about that, too, is, first of all, a lot of employers do have a match. It may not be the biggest match in the world. You're maybe looking at 2-3%, but that's extra money that's getting in there that you didn't have to put in. And then the other cool thing about it is, of course, you're going to save on your taxes, but if you're in a lower income situation, you could get that pension savers credit, which would give you additional funds that could come back on your tax return.
Yep. I with teaching, and I actually with the client putting money away into an IRA as an example. I say you have a 22-year-old, makes $14,000 a year, and he puts away $1,000 for, into his IRA.
Yep.
Okay, that means he lowered his income by $1,000. And he's going to get a $500 credit.
Isn't that unbelievable?
So he's saving $500 right off the top, then 10%, that's another 100, plus New York State. So he's saving $660 by putting away $1,000. So in essence, he only has to come up with $340 of his own money.
That's right. And by the way, too, guys, you have till the end of the tax season to make that contribution to that IRA. And that's what a lot of people also don't realize. They think, well, I got to get that in by the end of December. That's not true. You have until April 15th this year to get those contributions in to be good for 2012. So that's a very big deal. And
and say, oh, well, I was going to buy a car with that money, that 22-year-old. He takes it out April 15th, okay?
Yep.
He's got to pay tax on the $1,000.
Yep.
So at 10%, that's $100.
Yep.
Plus a 10% penalty, that's $200.
Yep.
Okay? Plus New York State, so $260. The government gave him $660.
That's right.
So he's still up $400.
It's unbelievable.
I mean, hello?
And, this kind of brings me to my next thing, because I was saying the December 31st thing. People should also be prepaying things, right? Get those last-minute payments in. Like, for example, you got a mortgage you pay on? Get it in before December 31st so that you could take the interest deduction so you get a double-dip interest deduction for the month of December. So you'll double pay it, essentially.
If you're an estimated taxpayer, pay your fourth quarter New York State, which is due January 15th, before the end of the year. This way it counts as part of your state tax paid for this year's tax return.
And same thing with if you're in a business and maybe you have some credit cards that have some stuff on there, if you got the ability to pay it off, or you'll get the interest deduction on the credit cards. And same thing with if
braces, pay your medical bills off now.
Right.
If you're at that 7.5% in for medical, pay up more. Use that to your advantage, because it's very rarely someone gets to that 7.5% floor.
It's a huge, huge deal.
Yep. But we're going to go to the phones and talk to Barb. Hey, Barb, how can we help you?
You twice mentioned a pension deduction on your taxes, and could you explain what that is?
Okay.
You get it?
Right. Well, first of all, may I ask how old you are, Barb? Are you over the age? Are you over the age of 65?
Yes.
Okay, you wouldn't be able to qualify for it because of the fact that, but that's okay. But it's for people that are typically working and they're able to put into an IRA or a pension, and if they're able to do that and their income is a lower income, usually around
under 50,000 for married, joint, 25,000 for single.
Right, and they could actually get a small credit for it back on their tax return.
Okay.
Yeah.
Okay.
It's easy.
Yep.
Thank you.
You're welcome.
No problem.
And sometimes it's that simple, sometimes it's more complicated. Give us a call, 803-0930.
Absolutely.
And we're here to help during the week, 632-7886. Go to our website at egtax.com.
And by the way, you can also like us on Facebook and now Twitter too. So if you want tax updates throughout the tax season and currently, you'll hear it first on our Facebook and Twitter pages. So don't be sure to like us on Facebook and follow us on Twitter.
Yep. And some other last-minute things people can do is catch up on their tithing or their charity.
Absolutely.
Charity is big. How many, besides Christmas cards, I think the number one other thing you get in the mail is, please give to this charity.
Yep. And especially now, this time of year when the giving is going on, I mean, make sure it's something where if you're donating to it, you can get a receipt, because it's great that you're doing such a nice thing, and the cool thing about it is you get an extra kind of little benefit on your tax return too. So why not clean out the basement, donate that stuff to the Goodwill, or if you got some money that you wanted to donate anyways, this time of year, just make sure you get a receipt, make sure you get a canceled check, so that if you're ever audited, you can prove it, and then you got a nice little write-off for yourself.
Yep. Save. If you want to write it off, you need the receipt. I think Salvation Army, you now can text to Salvation Army and they'll take it right off your phone bill, so then you just save your phone bill as proof of the receipt. So, I mean, places are making it easier for you to donate because they understand how tight and tough things are.
That's right, but a word of advice, when you're donating clothes to like the Salvation Army or Goodwill, do yourself a favor, make a list of all the items that you're donating. Not only have them sign the receipt, because they never tell you what exactly is in the receipt. They'll say like 1 bag, 2 bags. Have them sign the list too, because then that way, if the IRS ever does audit you, you could say, look, here's my list that's signed, here's my receipt that's signed, I did donate these items.
And we're going to go back to the phones and talk to Charlie from Hamburg. Hey, Charlie.
Hello. I have a question on selling my stock.
Sure.
Because of the fiscal cliff.
Mm-hmm.
I don't want to sell it, but I don't want to get burned on the tax increase. How soon after I sell it can I buy it back?
Well, if it's sold at a gain, you can buy it back whenever you want. It's when you sell it at a loss, you got to wait
30 days.
30 days or more than 30 days to buy it back. But as long as you're selling it at a gain, yeah, you could sell it right now and buy it like the next day or the same day.
And then my basis would be my new basis would be the what I paid for it.
That's
Your
absolutely.
new purchase price, yes.
Okay, thank you very much.
You're welcome. You know, and for those listening, what Charlie's referring to is right now, capital gains rates for someone in the 15% bracket is 0.
Yep.
Someone over the 15% bracket, they're paying 15%. Starting January 1st, 2013, what are the new rates?
The new rates are going to be 20% and 25, right?
Yep.
Yeah.
Yep. And they may be getting rid of the qualified dividends.
Yeah, that's a huge deal. That's gonna touch a lot of people, I think.
Yep. And then let's go to David in Cheektowaga. Hi, David.
Hi, how you doing?
Good.
I got a question about buying, if you're self-employed, buying a new equipment like a truck. Does that truck has to be brand new?
To take the initial write-off, like if it's a brand new truck and it's over 6,000 pounds, you can do the $25,000 exclusion, and yes, it would have to be brand new.
Otherwise, it would get depreciated out.
All right.
Okay?
Yes, thank you.
You're welcome.
Bye-bye.
But you don't have to pay that in cash. You could take out a loan.
You can take out the loan, but it's
Right.
got to be a brand new, not new to you, but new to the world.
Yep.
So,
Yep.
I mean, and that's a hard thing sometimes for people to understand, that it's a new car.
Yep.
And what, the 6,000 pound vehicle is because they want to make sure you use it for work.
And they make it only in trucks now for the IRS law. They used to have it where you could buy like an SUV too, and that went away as well. So now it pretty much has to be a truck in order to qualify at this point.
And let's go to Steve in Lancaster. Hi, Steve.
Hi. I've got a situation where I've retired and I don't have any earned income this year. I am drawing a pension. However, my wife is still working, and it's been brought to my attention that I may still be eligible to contribute to either a Roth IRA or a traditional IRA through the spousal whatever
Right.
law that is incurred. And I'm just checking. I'd just like to know if that's true or not.
As long as you're under the age of 70 and a half, which you sound like you are, then absolutely your wife could contribute in her IRA if she doesn't have, retirement plans at work or what have you, and for a, quote, non-working spouse, which would be you. And as long as she doesn't exceed her earnings, then she could take the whole 6,000 for you if you're over 50, or if you're under 50, you could do up to 5.
Well, she happens to have a 401k, and we do, in fact, and we fund that fully, the
Okay.
17% or whatever, and then we also fund a 401k or a Roth IRA for her. I still am eligible for either one of those IRAs?
Absolutely.
Yep.
Well, that's just fabulous news. I can just take it and then actually put it into another tax shelter.
That's
So
right.
well, that's great news. Thank you very much.
You're very
You're
welcome.
welcome. You're welcome. And that's, a lot of times people ask, should I do a Roth or not Roth? That's the question.
That's exactly right. And which way tends to work out better? And I love teaching this in my class too. It really depends on your situation more than anything. For most of the people that we deal with, usually traditional, in my opinion, works out a lot better for a couple reasons. Number one, if you're working right now, think about it this way. Well, if we're continuing with the tax law we're in, let's say you're in the 25% bracket. If you put in $6,000 to a traditional IRA, you get to save 25% of $6,000 is $1,500. Whereas opposed to when you retire, most of your income derives from Social Security, which in most cases will not be fully taxable in one way or another. So you might be in the 10 or 15% bracket when you actually retire, which means you're saving from 25% to 10 or 15% there. But the other thing that they don't tell you too, which is cool, is in New York State, the first $20,000 of pensions and annuities, if you're over the age of 59 and a half, is tax-free. So you'd be saving on the state as well. That 5 or 6% when you put in, you'll be saving that too. And so a lot of people don't realize that.
There is a lot of planning to going into to say what type of retirement account should I go in. And you're doing the smart thing is by loading up your retirement.
Absolutely.
That's the best thing you could do.
Especially when Social Security is so reliable nowadays.
8030930, 8030930, star 930 on your cell phone, and we're going to go to Margaret from North Tonawanda. Hey, Margaret.
Hi, guys. I'm going to be turning 70 and a half in January.
Congratulations. Happy birthday.
Happy unbirthday, because it's your 70 and a half.
Okay, I was told by someone that I should be taking my distribution before the first of the year. Or
Okay.
should I wait until...
Okay, when are you 70 and a half again?
I will be 70 and a half in January.
In January. Okay.
Yes.
What it is the year you turn 70 and a half, you have, and it's only the year you turn 70 and a half you can do this. There's a special election you can make. You can wait to April 1st of the following year to take out your first distribution. So you could actually wait to 2014.
The whole thing is you got to watch this fiscal cliff thing like a hawk. That's
Well,
really
that's-
what it comes down to.
That's what I was worried about, because I was told that I would have to pay a penalty, you know.
Well, no,
You know
no.
how it-
No.
What it is, you have to April 1st to take your first distribution. Then by the end of 2014, you would have to take out your second distribution. Okay?
I see.
The penalty is if you say, oops, I forgot to do it altogether. Okay? Then the government would penalize you 50% of what you were supposed to take out. So if you're supposed to take out $7,000, the government says, thank you, Margaret, for that $3,500 donation to us.
Oh, boy.
Yeah.
Okay, well, it's I think around $4,000.
Yeah, but
Still,
still,
that's
you
two that
got to
you
make
could have.
sure you do it. But you have two choices: to do it in the first one in 2013,
Okay.
or you can do both. You know, the first one in 2014, and then also take out 2014's also in 2014.
Okay. Thank you very much for the information.
You're welcome.
You're welcome. You know, and it also comes down to tax planning. What is your income going to be in 2013 compared to 2014?
And that's exactly right. And the other cool thing about it, too, is she doesn't have to take out from each plan. She could actually take it all out from one plan. So now may even be the time to also sit down with your financial person or your bank and say, which account am I doing the worst in?
Yep.
And pull the money out of that one instead of going after and doing an even distribution where you might be losing some good accounts, too.
Right, right. And we are going to go to Jim in Amherst. Hello, Jim.
Hello. I have a simple question regarding the Roth versus traditional. I was under the impression that the Roth you do not have to take out at 70 and a half.
That is correct. A Roth you do not have to take out at 70 and a half. That can stay there forever. You die and it goes to your beneficiaries.
Great. That's the only thing I wanted to know.
Cool.
Okay?
Thanks very much.
You're welcome.
He was right. That was simple. Usually when people say it's simple, it turns out to be so much more.
Yep, yep. And Mike from Cheektowaga. Hey, Mike.
Hi. I deal with Steve. He does my tax on a regular basis. I left a message earlier this week. A simple question. Last year I talked to you. I earned more than I'm retired. I earned more than the $14,000. I have to pay it back, which is not a problem. My wife is retiring next month, and she earned maybe $6,000-7,000 over the $14,000. My question is, she has like $4,000 or $5,000. I don't know exactly what it is that she had taken out of her for IRA.
For the 401k.
Yeah. Now when they check hers, are they going to take her full amount, or is it going to be deducted the 401k money?
Are you talking about making over the $14,000 for Social Security?
Yeah.
Right. Yes. Yes.
Okay.
And she made 23, I guess, or something like that. And she put between $4,000 and $5,000 in a 401k.
He's wondering if they're going to base it on after the 401k.
Yeah, what are they going to base it on? Are they going to base it on the full amount or on after the 401k money?
I believe they will take it on the Social Security wages.
That's what they go by, because that's what they tax your Social Security tax on. But I'll tell you what, just to make sure, we'll do some quick research at the office to make absolutely sure, but I believe they're going to go by the Social Security wages, which would be the whole amount.
Yeah, so me and Steve are in the office on Monday. Give us
And
a
I'll be
call.
there Monday morning, so yeah,
Right,
definitely give me a call and we'll get it figured out for you.
I did leave a message with Steve. It's just a simple question. I just wanted to know, because the money's been taken out. I just wanted to see where it was. Nobody seems to know, and I just thought I'd ask,
Yep, well, we'll get to the bottom of it, and like I said, give us a call Monday, and we'll even make an announcement on next Saturday's show, too.
Absolutely.
Okay, appreciate the time, sir.
Thanks, Mike.
All right.
And let's go to Jerry from Lockport. Hey, Jerry.
Hi. I was listening to the show last week, I think it was, and the subject of student loans, penalties was brought up, and I think it was Esther that mentioned there's a form for the innocent party that can help save thousands of dollars if they use it.
No, that's for spouses. We were talking about innocent spouse last week. That's not with student loans, though, necessarily. Oh, you're maybe thinking of injured spouse. Okay, so what we were talking about was last week, if somebody owes, like let's say you're married, and somebody owes a back tax debt, a back student loan, or back child support, and you're worried your tax refund is going to get seized, you could file an injured spouse form, and they would give you the prorated part of your tax refund. But we weren't talking about actual relief on your student loan itself. We were just
in other
talking.
words, it's if you have penalties for not paying your student loan.
Well, no, it's if the IRS is going to take your refund to pay your student loan.
That's what we were talking about.
Okay, thank you.
You're welcome.
Okay.
Well, good luck. Good luck to you, ma'am. I hope you
And-
get that figured out.
You know, this is Chris Fabian from EG Tax with Steve Jacobson. We're here to help every Saturday from 3:30 to 4 on WBEN and 9:30 a.m. 107.7 FM. Offices all over the place in Western New York, heading in Rochester this year, Naples, Florida.
Absolutely.
Another one in Phoenix, Arizona. We're there to help, even in your nightmare.
632-7886. Give us a call. Thanks.
You've been listening to Ask the Tax Lady with Esther Gulius and EG Tax.